cut it out. But I wouldn't get too, I wouldn't jump ship just yet with that. Let's see here. All right, let's get into looking at some pivots and talking about the buy points and where I look to buy. Where the earliest point that I'm going to buy a stock is coming off of a cheat area. Okay, now that would be when the stock, after it bottoms and it comes up off the lows and then has a little pullback. Once it starts to turn up from there, that would be your what we call your cheat area, or what I call making the turn. So it has to break the downtrend, right? And it's already in an uptrend. The stock's in an uptrend, and then this is a correction within an uptrend. So you've already got the stage 2 uptrend, and now you've corrected within the uptrend. What I'm trying to do is get in sync when the shorter term trend that turned down starts to turn back up and get back in sync with the longer term trend. So you get both the long term and the intermediate term and the short term all in one direction. Now, if it runs up too rapidly up that right side, that's what we call time compression. And we don't want to buy there. We want to allow it to naturally tighten up and go through that phase where you're going to get that VCP. So you don't want to just jump in as it starts to come up and it breaks that trend line. You want to let that right side form, and you'll get that pullback. So basically there's 4 things that have to happen: a downtrend, a markup that breaks the downtrend, I would be at B here, a pullback within the base, and then a move above that high of that pullback, and that's when the stock is officially what I call made the turn. Making the turn means that the trend is now back up and in sync with the longer term trend. Now, so there's a few areas that you're looking to buy. This is what we call the cheat area. This happens in, let me just go back here. This happens in the middle third. So there's basically 3 areas I'm looking to buy: the low cheat, the cheat, and the handle area. The low cheat can happen sometimes below the 50-day moving average, and it's a little bit more tricky. I generally will buy a portion of my position there, and if I'm so lucky that it just blasts off from there, great. I've got some in the stock, but the cheat area is the most common. The cheat area and the handle. I find the cheat area is equally as common as the handle, and I like it because I'm in a little bit earlier. It's a little less obvious. So if I'm going to pyramid into a trade, I'm going to buy some at these areas. I might buy a little at the cheat, a little at the low cheat, a little at the cheat, and then finish up at the handle. A very logical way of doing this is to buy 25% of your position on a low cheat, 50% on the cheat, and 25% at the handle, so you don't run up your average cost. You're basically putting the bulk of it right around the middle of the base. Now, it doesn't mean you're going to get all those. You might not. Let me show you an example. So if you remember AA, I pointed this out last week, and this was the low cheat setting up. We put it on buy alert. It came through there. And then I told you, I said, a few things may happen here. Either it just runs straight up the right side and you end up with a nice quick profit. It'll be compressed and extended, and you can probably take some off into that. Or you're going to get a little bit of resistance at that 50-day. You'll put in a cheat and you'll get another buy point. And then from there, you may even get a handle, or you might not get a cheat and you get a handle. Well, now it's starting to look like this runs up and we'll get a little handle area here. But this is time compression. See, now it's dangerous because this could very easily pull back. It may pull back all the way to the 50-day. That would be a 6-point pullback, over 10% move in the stock. And from a low risk standpoint, you'd be stopped out. So that's why you can't trade this here. But down here, you got a nice little pivot setting up, and you buy some here. If it doesn't set up the other pivots, you have a portion of your position in. So that's a good example, though, of a recent low cheat that is set up. Now, again, you could put your whole position on at the low cheat. It doesn't mean you have to scale. You could get very aggressive there, but people are usually not, it's not as easy to identify for the novice trader. It's more obvious when it hits a new high. But remember, you don't have to have a stock hit a new high to have a breakout. You're looking for it to go above the pivot point, not necessarily into new high ground. Now, again, like we have here, this is the cheat area, right? You can get a handle now that will form. So let's say you missed the cheat area. Well, does that mean that you don't buy the handle? No, you buy the handle. Now, the stock's improving. It doesn't. The fact that it's setting up at a higher price is a good thing, not a bad thing. You have to get off the buy low mentality and start thinking buying higher, but within the base. Once it gets out of the base, now you leave it alone. Now it gets extended. Now you can sometimes, if you miss the cheat, you miss the handle. I mean, to miss all these, you really got to be not looking at the market and not listening to me, what I'm showing you here. But you should see these as they're setting up. But let's say a stock breaks out. It happens. Other stocks sometimes I don't see. They break out. And then they get a little pullback because maybe the market comes in. That's a post-breakout setup, and you can get a natural reaction that sets up, we call it a cap. You'll get a little mini cheat area that might form, usually over 12 to 18 days. That's also playable. And sometimes your first pullback to your 50-day, I don't usually like to make that play. I'm looking to be buying out of the base, as low in the base as I can, and then pyramid my way into a good-sized position, and then sell after it's gone through a few natural reactions and into strength. So that's the swing trade, methodology. But I know we've had a lot of questions about, about these areas to buy. Of course, again, if at the Master Trader Program, we spend 3 days with this stuff and go over it ad nauseum. And of course, this is all explained in both my books. And think of the 2 books as volume 1 and volume 2. It's really important that if you haven't read either, or you need to read both, because that's the full picture. You're going to get the selling, you're going to get everything you need, the trade management in the second book. In the first book, there's a lot on risk management. It's just everything from A to Z. You're getting 98% of it in those books. Just keep going over it and keep making trades and analyzing them after you're out of the trades, and you'll start to see. Now, I'm doing this over and over again. See right here, this is simply just a little base one with a little handle, tightening up, and you should always have VCP characteristics. Whenever you're seeing these cheat areas, these handles, these low cheats, it's always going to have VCP characteristics to have a correct buy point. FTNT, here's another one where, again, you could call this a post breakout. It came out right here, just above, and then it comes back, and I'm playing it as it comes off those lows, forming that little handle. But you see the tightening? Goes to the right. That's the tightest areas on the right. TGS. See here? Look how tight it is. This is a little cheat area, right? It just comes out, and now it doesn't form another pivot. It was too close to the old high. So very tight area. You're going to see in every trade I make. Here's a cheat area. There's a little cheat area right here. Again, very tight. See, they all have the VCP characteristics. You're always going to see that. Even EDU that I'm looking at here, right? This is just setting up. See, tightening on the right side. You see it's getting tighter and tighter and tighter. Volume coming in very low here. So now if it moves above that 93.25, that's your buy point. That's your buy point right there. That's the pivot, not this high. And if you want to, if you want to be a little more incremental and get some confirmation the stock indeed is moving out, you buy some at 93.25, maybe half your position, and then if it gets into new high ground, now you can finish up your position 92 change 95, and you'll be halfway in between. Your buy point will be right here. You didn't run the price up. It'd be somewhere around 94 or so, and you hadn't run the price up too much. So being a little incremental there would work. MTW, that's one. Remember, I've been watching here. See, it tightens up nice and tight here. This is a smaller base. It's not as high of a quality base that I would like to see. So I'm just pointing out, just showing you the tightness on the right side. When I'm looking at these names, I'm looking for that tightness. WTW, see, very tight here on the right side, and you're getting that VCP every single time, even in the power plays, even in the A and AB. Take a look at this. Let me just bring this up here. We'll zoom up a bit. So I'm buying here. So what is that? That's just a little low cheat area. Here's the downtrend broken, right? Here's the downtrend broken. Here we have the little sideways action, and as it starts to turn up through there, I'm buying it. I mean, even on a small basis, that was only what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That was like 12 or 13 days. I'm still applying 6, 7, 8, 9, 10. That was like 12 or 13 days. I'm still applying the same technique, the same rules. All right. So, all right. So I'm going to get going here and let you guys get back. And I hope this has been helpful today. And I know it looks like, I'm probably going to be light activity here going into the new year. We'll watch, though. You never know. A lot of times I found around holidays the market acts better than normal. This is a seasonally strong period, but let's see what happens here going into the new year. We've got 2018 to start fresh, and that's your 12 innings starting over again. And you've got 12 months to make your annual return for 2018. Don't think you're in this big race that you got to win in January. You've got 12 months to make your return. It doesn't matter if you make the whole return in 2018, December of 2018. If you were to go in cash for 11 months and then make 50% in December of 2018, you'd have a great year, right? So the key is to have a short period where you're making really great progress and avoid all the periods that there's noise and there's difficulty and the hard pennies. You want to go for the easy dollars. And until there's easy dollars, you ride the brake. It doesn't mean that you have to not trade. It just means you don't get real aggressive until you see things working and everything's lining up the way you need for your strategy. Maybe it's somebody else's strategy right now. I don't know. There's time for value stocks. There's time for growth guys. There's, everybody gets their turn. The key is for you to know what your strategy is and to wait for your turn. Wait for your pitch to come across the plate, and then know what you're swinging at, and that's when you unload and you swing for the fences. So that's it. Monitor the platform, and I'll talk to you guys. If anything major happens, I'll come back in and we'll talk about it. If not, monitor the platform throughout the week, and then of course next week we'll have another study session. We'll go over this again. All right.